Perfect. Let's get into today's session. So, I think let's start off with the mood for today. So if the markets had a mood today, it would be calm on the outside with group chat panic on the inside. The dollar currently, if we have a look, is steady after a wild session. The yen is finding its backbone finally. Bitcoin is flirting with big psychological levels at the moment, and the Dow is acting like it slept 8 hours and drank all its electrolytes. I don't even know at this point. Okay. So the question here is, are we seeing real conviction in the market at the moment, or just everyone waiting for Friday's NFP report like a season finale? So, for those of you who don't know who I am, good morning and welcome to the Daily Market Brief. I'm Francois, your market analyst here at ATFX Africa. And as always, we are going to kick things off with fundamentals first, then we're going to have a look at some technical analysis. But at all times, keeping it professional and practical with, well, just enough humor to remind us all that we are human, even if the charts sometimes behave like they're not. Okay. As we are getting into the session, as always, please remember that everything that I am sharing with you during this session is for informational purposes only. And at no point in stage during this session will I be providing financial advice. I am here to answer any questions that you might have and guide you through the market as best I can. So, now that we have that out of the way, I want to kick things off today with USD JPY. So, specifically looking at the Ninja today, and here we can see, as we said, starting with the fundamentals first, then we're going to look at the charts. So, the Japanese yen strengthened towards 156 per dollar as expectations grow that the Bank of Japan will continue raising interest rates this year. We also saw the Bank of Japan governor reiterate that rates will be adjusted as the economy and prices evolve in line with forecast. So, in essence, the message here was pretty clear. Japan believes that it's moving beyond its long deflation era and into something more sustainable, a virtuous cycle, if we may, of moderate wage and price increases. Now, at the same time, markets are watching for intervention risk. Business leaders have urged the government to address yen weakness and support a stronger currency, and that keeps traders alert because when intervention fears show up, price action can get dramatic. On the US side, oh my soul, it's been a fun week, okay? The broader dollar backdrop is less aggressive than yesterday's headlines might have suggested. Okay, we saw the dollar index steady around 98.4 after a volatile session yesterday, where investors had to digest geopolitical stress from the US attack on Venezuela, which appeared to ease as the session progressed. We have ISM data showing the sharpest contraction in US factory activity since 2004, 2024. Sorry, not 2004, 2024. And we also had dovish remarks from the Minneapolis Fed president, which stated, noting risk that unemployment could rise further. That combination reinforced expectations for additional Fed rate cuts this year. So even though markets are also pricing over an 80% probability that the Fed holds rates later this month, the US JPY currently sits right in the middle of these two big forces. So we have on the one side a potential more hawkish Bank of Japan path, and then we have a Fed path that the market increasingly sees as leaning dovish, while expecting no immediate move this month. And with labor market data building into Friday's jobs report, USD JPY traders are effectively staring at a calendar and saying, we move when the data tells us to move. So, that being said, let's have a quick look at the chart. So, here we can see USD JPY has been consolidating relatively at this specific point, and it is still trading within that ascending channel, which supports an uptrend at this specific point. Now, the lower boundary of this specific channel is sitting here around a 156.1413. That general area here is that lower boundary of the actual channel at the moment, which is cushioning pullbacks at the moment. So we can see nothing's really breaking through here yet. So that uptrend is still generally intact. Now, the channel's cap, which is relatively high at the moment, it's all the way up here at like 162. If we have a look at a projection higher, so that's relatively quite far at the moment, and not really something that we are actively aiming for until that next resistance is broken, which we have that near term resistance sitting here at 157.9. Now, once that gets cleared, and you can see that has been retested multiple times here, 19th of December, 20th of November. So once that actually gets broken and that gets pushed out of the way, then we can start having a look at that higher end of the channel at the specific point in time. Now, short-term moving averages we can see have relatively flattened, reinforcing a bit of that consolidation theme. Our stochastic at the moment is sitting here around 41. So that kind of keeps upside momentum contained without signaling oversold conditions just yet. So we haven't broken below 20 yet. So there's no clear oversold conditions at this specific point. So the technical story kind of sounds like the following, trend structure is intact, momentum is slightly muted at this specific point in time, and the next directional move likely needs a larger catalyst. And again, that brings us back to that obvious question. Does Friday's NFP report provide the spark, or do we keep drifting inside the channel like it's waiting for permission? And I kind of feel like that's what we are seeing here at the moment. Now, if we are looking at some intraday options, dropping this down to a much, much lower time frame here on the 15-minute, again, before any clear bullish momentum can come into play, we need to break above this resistance that's sitting here at, let's call it 156.9. Now, if we get a break above that, that could open up the door for a trade higher, going back up to test that resistance level. The only downside for me on this is it is going to require a relatively large stop on this one. So you're going to have about a 1-to-1 risk to reward ratio. But again, 15-minute time frame, you can calculate that in as a nice little intraday trade. Again, we just have to wait for a clear break of structure above this resistance level that we are seeing here at the moment. Once that clears, that will obviously give us some upside guidance. But then there's a a secondary option. I'm going to go up a little bit of a time frame here at the moment. And that is if we do break structure out of this actual ascending channel, which could then set us up for a short position. And that could be here around 156.1, potential stop here at 156.5. I would put a first TP at this 1-to-1 risk to reward ratio, which is more or less aligning with that 30th of December low point. But further than that, what can another option would be this 18th of December low point, which is around that 155.3, which obviously gives you about a 2-to-1 risk to reward ratio on this one as well. So it kind of opens up a little bit, but again, would just wait to see what the market brings for us first. So, are we going to break structure lower or are we going to break structure higher? And based on that price action, we could start identifying some nice intraday trades on this specific currency pair, helping us, into this first trading week of the year. Again, traders, if there's any questions, please feel free to ask. Um, you guys are very, very quiet at the moment. Um, okay, wait, I see. Yeah, we go. Um, okay, so Charles sent me a message in the Q&A section that says, "Can hear you." Thank you so much, Charles. I do appreciate that. So, traders, it does look then if you are unable to use the chat section, you are also welcome to use the Q&A section. Okay, so if there's any question you would like to ask, pop it for me in the Q&A and I'll answer it there. So I actually didn't even see that. Sorry about that, Charles. I do apologize. Um, I can mark that as we are done with that one. Okay, cool. So yeah, if there is any question, if there's anything that you want me to look at, so if there's any specific currency pair or anything that you would like me to look at, please let me know and I will be happy to assist from there on forward. If you are watching the recording for this though, so that's for everyone on YouTube, not here on the Zoom session, and you would like to attend this session live, no worries. I will pop the registration link in the description below and you can join us next time. Moving on to our next topic of discussion, and this is probably one of my favorite topics of discussion at the moment, which is Bitcoin and more specifically, obviously, cryptocurrencies, but Bitcoin being our primary crypto at the moment, and just having a look at what is happening in the market and just some clear opportunities that are arising at this point in stage. Now, again, you might not at this specific point be a big crypto fan, or maybe you're very new to the industry and you haven't actually tried out cryptos yet. Again, please let me know and I'll be happy to assist from there on forward. Um, yeah, see, I have some questions. Let me answer that first though. So, Robert asks, can we look at Ethereum and gold? Absolutely not a problem. I'll also do it directly off the Bitcoin. So we'll do Bitcoin and then we'll do Ethereum and then we'll do gold. Okay. And then Itumeleng asks, do you trade individual or for an institution? Itumeleng, the answer is both. Okay. So I'm a retail trader. I trade for myself and obviously I manage my own account, which I have done so for the last 11 years. And then in South Africa, let me put it that way, I am a licensed representative, Cat 2 representative on an FSCA license. I'm also a Cat 1 rep, so that also means that in essence, I am licensed to give financial advice. Although during this session here today, I am not getting any financial advice. Let me just make that very clear. I am licensed to do it, but we are not giving any financial advice during this session. And then as a Cat 2 representative, I am also licensed to manage institutional funds. So the answer on that question is both. I manage my own portfolio as a retail trader, but I also trade institutional funds. Okay, cool. Uh, moving on. So as I said, Bitcoin. Yes, almost forgot. So, uh, I love live sessions. I missed this. You know, I had a super nice break over December, but I really missed my live sessions. So Bitcoin has been drawing attention very, very early in the year so far, supported by improved sentiment in the crypto market. And one key theme at the moment is if we have a look, and this is now where we're going a bit more institutional. So, option traders are targeting that psychological $100,000 mark again. So, and you'll see as well, it lines up so beautifully when I show you the technicals now as well. Though we also see, based on flowcharts at the moment, that some still see a possible drop to around that 80,000 mark. And again, I'm going to show you the significance of this as well when we have a look at the technicals. And this alone tells us that even when sentiment improves, the market still keeps one eye on that trap door, in essence. Bitcoin gains have also coincided with a broader risk on rally, especially now at the start of the year, as global equities and commodities are reaching fresh highs. One index reaching fresh highs yesterday was the Dow Jones. We're going to discuss that today as well. And then adding to everything, macro wise, the same forces in the dollar story that we spoke about earlier are also showing up in the crypto story at the moment. Weaker than expected US manufacturing data, dovish remarks from key Fed officials. Both of these reinforce expectations for additional rate cuts this year, and that tends to support broader risk appetite, which is obviously positive for crypto investors. Now, layer in geopolitics, and investors are weighing fallout from the Venezuela situation with speculation that, you know, the Maduro government may hold a substantial undisclosed Bitcoin position under sanctions. Now, this is obviously all hearsay. So, but it is currently quite interesting to see how this is evolving. Okay. But importantly, just remember that these claims were noted as unverified. Okay, so again, it's my job here today to share all this information with you, but also to give you the facts. Okay. Another major storyline at the moment is institutional demand and ETF flows. Now, US listed spot ETFs recorded a massive $458 million in net inflows last week, which ended two consecutive weeks of outflows. Now, yesterday, net inflows were around 697 million US dollars, with BlackRock specifically, where we saw their clients acquiring 3,948 Bitcoin. It's a crazy amount, valued at approximately $372 million. Now, whew, uh, no funds were reporting outflows during yesterday's session. Just important to note on that one as well. And despite geopolitical headlines, the on-chain narrative is basically as follows. Okay, traders stayed calm yesterday, no signs of panic selling. So Bitcoin's fundamental backdrop today reads as follows. Macro headwinds or macro tailwinds, sorry, macro tailwinds plus improving institutional demand plus calm positioning equals, geopolitical noise in the background, but no clear panic at this specific point in stage. Now, if we have a look at the charts here today, technically we have quite a clean roadmap at this specific point in stage. Bitcoin closed above, and then remember, this is on a daily time frame as well. Bitcoin closed above this um, upper consolidation range, if I want to call it that, which is sitting here at about 92,500. And we kind of cleared that quite nicely. Okay. Now, it is still trading just within this ascending triangle, which again is a nice bullish pattern. So if we get a nice clean break, that opens up that $100,000 mark that I spoke about earlier, which realigns with the 50 fib and that resistance level there. So again, very nice, clean technicals on this, and everything is just aligning quite nicely right now. Now, from where we are trading now, I would say if we had a look at a bit of a shorter term position, and I'm going to zoom out quite significantly here so that I can justify what I'm going to say now. Now you can see here there was this little bit of a pullback on the hourly time frame. So again, if we have that nice clean break of structure, that would give us a potential push towards this higher level here, which is around $97,000 a coin. Now, that would obviously be the precursor to achieving that $100,000 mark. Now, if there is a correction, we will most probably see a push back down to this 90,000 level around here, where you can see that was the previous breakout zone. So, in essence, if we are looking here at the moment, technically Bitcoin is behaving like it just left a crowded room and found no space to breathe. And it's still approaching levels where psychology matters. Yeah, let me just get this back up the way I like it. There we go. So that being said, here's the question traders or you should be asking yourself, if $100,000 is the headline magnet, does price action stay orderly on the way there, or does it get choppy as positioning builds? And this is what we will have a look at today. Now, as per request, you guys did ask for Ethereum. So obviously, Ethereum's fundamentals are very, very similar to the fundamentals that we covered now for Bitcoin. Again, nice strong resistance. And the only difference is I think here Ethereum is sitting at a much nicer bullish momentum level, if I can put it in such a way. So we had this larger change of character uh around the 31st of December. And again, I'm on a relatively high time frame here. I'm on a 4 hour time frame at the moment. And we saw a nice clean break of structure. Now, there is obviously a little bit of a possibility for a slight pull back to this 3,150 level. We can also see our EMAs are crossing quite nicely. Stochastics are oversold at the moment, hence why I'm saying there is a chance for a little bit of a pullback, break higher, break of structure, and then we could push back up to this 3,600 level. So again, you can see here, even on the daily time frame, we have a relatively high amount of dynamic resistance sitting here around this 3,360 to 3,350 range, which is where our larger EMAs on the daily time frame is sitting. So from a dynamic resistance point of view, that is a relatively key level to be looking at. I mean, here we saw this downward momentum. We saw price move back up. This was on the 11th of December. Went straight to that dynamic resistance, rejected and pushed back down. So we need to see a relatively clean break above that which would obviously ignite that movement towards the higher resistance at 3,600. But up until that point, I will currently sit on my hands a little bit. Okay. If you want to properly intraday trade this, obviously, as you can see here, very nice market structure at the moment, creating higher highs, higher lows, higher highs, higher lows the entire time. Higher high has been created. Now there's a bit of a pullback. So again, just a little bit of a push there. Above would give you again that nice break of structure, which I would say sets you up for a very short term position. I wouldn't push this too far. If you want to, I would maybe go one risk to reward on this. Uh Potentially pushing for like a 2 to 1 risk to reward ratio, which limits you around that 3,400 level. Now, again, if we go up to the daily time frame, you will see that's relatively at the upper end of this dynamic resistance range. So still relatively safe, but it gives you that intraday support. Um, and you can basically just take it from there. Stuart, I do hope this answers your question on that. Please let me know if your analysis shows something different at the moment. Again, please let me know. I'm happy to engage in that conversation as well, and see how I can assist and how we can help. And I would, again, I always love hearing from you guys and hearing what your current data is showing you on your end. Now, you also asked about gold. Obviously, after the weekend's Venezuela episode, this has been extremely bullish, to say the least. And again, we had this bit of a resistance level here. We saw clean break above that during this early start of the week. Saw a nice little retest and now just pushing higher. So again, approaching that extreme high that we saw around 4,520, which was that all-time high achieved at the end of December. After which we saw a relatively large pullback, and now we're seeing that movement back up higher. Now, just to take some, so all I want to do is I just want to add in our fib levels here as well, so we can just see on the lower time frame when we start looking for some intraday positions where would be nice entries for us on this. Now, again, market structure on the 30-minute looks very nice. Higher highs, higher lows forming quite nicely on this. A push back down to the 78% fib level here would actually be really nice for a bit of a sniper entry if you want to be a little bit more risky. If you want to be on the safer end, I would wait for a break of structure, and then we could potentially aim for this 50 fib, 38 fib line, which is here. You can see also previous resistance lining up quite nicely with the 29th of December. So if you do get that break of structure higher from where we are at the moment, you can easily get a nice little 1.5 to 1 risk to reward ratio on that one. Or like I said, if you want to be brave and we get a nice little push down to this lower level here at 4,445, you can have a relatively tight stop. I would place it just below these low levels here from earlier this morning. And again, then you can either aim for this level here at 4,490 or higher up at that 4,517, which then that almost gives you a 4 to 1 risk to reward ratio on that end. So again, just waiting to see how price action plays out on this one, trading with the momentum at the moment. Wouldn't really take any short positions personally on this right now. From here, I would wait to see a nice clean break below this support level here at 4,380. And if we get nice clean price action at that specific point, that could open up the gates potentially for this thing to push back down to around this 4,280 level. But again, price action has to confirm that first. From where we are sitting at the moment, bullish momentum is intact very nicely, and the upper levels to this specific commodity looks to be where we are aiming to at the moment. But again, before entering into the market, I would just want to see price action giving us a proper setup for that. Robert says, thank you very much for that Ethereum analysis. And my analysis does agree with yours. Appreciate. Only a pleasure. Glad to hear it. Okay. For the rest of you as well, again, if there is anything that you would like me to answer, if you have any questions, if you have general questions about trading, you might be attending the session here today and you have some burning question, or, maybe your trading wasn't all it could be during 2025 and you wanted to do better in 2026. I want you to do better. So let me help you do better. So ask those questions so that we can get you to have your best trading year yet. Okay. That being said, the last instrument that I wanted to discuss today is US 30, or better known as the Dow Jones Industrial Average, which was acting like a man on a mission yesterday. Okay. So US 30 started the year with noticeable strength. Currently, we are seeing the or the index trading around 48,900. It was trading a little bit higher, around 49,000 earlier today, which was up about just over 1% for the day so far. Now, yesterday we also saw it close 1.24% up on the session. So definitely strong bullish momentum showing in this index at the moment. Some of the leading causes, so if we look at the companies that are making up the US 30 index, leading gainers were companies like Chevron, which was up over 5%. Goldman Sachs was up around 3.8%. And Caterpillar was up around 3.1%. Now, the primary driver behind this move was energy stocks stood out after the US confirmed the capture of the Venezuela's president following that military operation over the weekend. Now, markets appear to be weighing the idea that a political transition could eventually open Venezuela's crude reserves to more investment and production, which investors interpreted as, constructive for US energy names with regional exposure and expertise. Meanwhile, broader sentiment is still anchored to the week's main macro event risk. Friday's US NFP jobs reports is obviously going to play a massive factor. I know I've mentioned it multiple times during the session, but as you all know, it's a major report, and it's the first NFP that we are getting on the first Friday of the month since September last year. Okay, so just feels good having things go slightly back to normal. And uh, obviously, accompanying the jobs report, we have the ISM manufacturing report that I mentioned earlier, which contracted. Fed commentary also played a mark. And again, markets pricing in that probability to hold rates later this month, which saw obviously this rally come from that. But we also saw that, seeing that we are seeing that bit of a pullback at the moment. And I can probably put up the charts here so you can see what I'm seeing on this one as well. So looking at that bit of a pullback, you know, markets keep checking their rearview mirror at the moment. It's not just open road and heading for higher highs or new all-time highs the entire time. Got to that all-time high and now is pulling back a little bit at this specific point. Now, There is one additional point worth noting, which is US stock futures were largely flat after the rally yesterday, a sign that markets are upbeat but not reckless. So, or in one plain term, the Dow is confident, but it's not sprinting in flip-flops. Okay, it's about the easiest way I can explain it. Now, if we have a look at the technicals here on your screen at the moment, near-term support is where we are right now. Okay, so if you have a look, these December 12 highs, it's that high point, and literally we've got this beautiful pullback to exactly that 48,880 level, which I was looking at earlier today. So that's our near-term support. Now we do have deeper support, which is here at 48,000 flat. And then our resistance at the moment, yes, we do have the all-time high, but the larger resistance is currently sitting at this 123.6 Fibonacci extension level, which is sitting around that 49,600 level. Now, on the 4-hour time frame here, we can also see a few additional technicals, such as the stochastics is sitting in overbought territory, indicating that we could expect some pullbacks today. From a behavior standpoint, the index is operating at all-time peaks, which matters because markets behave differently at record levels. There's no previous resistance. It's just price discovery and sentiment at this specific point. So I would say from my end, the technical message is simple. Momentum is positive, but this week's macro data will likely influence whether that strength continues smoothly or gets more two steps forward, one step back type of trading from that end. Now, if we do look at some lower time frames on this one specifically, dropping it down, let's go to about a 30-minute time frame. Again, here you can see this pullback. Now, here again, stochastics have now shown that we on the lower time frame are at the end of that pullback. So what that could hold for us now on a lower time frame end is if we push up higher and we get a nice little break of structure back above this 49,000 level, that could open an intraday long position, relatively tight stop around here, just aiming for that all-time high again, which gives you about a 1.2 to 1 risk to reward ratio. Nothing big, just a nice little intraday setup pushing higher. Again, I'm not all that confident entering into any sells based on current market structure here at the moment. Now, there is still probably a slight possibility, especially like see if we drop back to an hour time frame. We're still at the very top of the momentum. So there is a possibility that we could push back, I would say, to even the top of this dynamic resistance, which is our 100 EMA, which is sitting around, we can round it off around, 48,550 to 48,590. So that general range, that's a definite possibility, and that could provide nice little sniper trade entries from that end. Again, probably aiming back for that all-time high, having a slightly tighter or a little bit bigger stop loss, but still tighter stop loss, which will give you about a 2.5 to 1 risk to reward ratio on that end. So definitely some great opportunities here. Again, just have to be patient, wait and see what price action shows you, and don't just jump into the market blindly, if that makes sense. That being said, if there's any questions from you guys, we've been going for about 45 minutes, so I'm going to start wrapping things up. But if you have anything to add, please let me know. If there's anything that you still want to ask, if there's anything you still want me to look at, please let me know. For those of you who did participate and interact. Thank you very much. I always enjoy that. One of my favorite things about hosting lives. If you were a first timer on my live sessions, welcome. And I hope to see you again. We will be having another one on Thursday, and this will repeat every Tuesday and Thursday going forward. So, ooh, got a nice little long message. Okay, I have two. Let me read the short one first. Short one's from Robert. It says, makes sense. Thank you very much. We all missed you. Aw, thank you, Robert. I appreciate that. Okay, now for the long message, which is from Israel. Two questions. First one, is there any benefit in having an account with higher leverage compared to one with lower leverage? For example, 1 is to 500 versus 1 is to 100. Does it mean my position will be closed at later or out closed out later for 1 is to 500 versus 1 is to 100 if I have a large drawdown? Okay, I'll answer that question for you just now. And then from an ATFX perspective, I love these type of questions. What is the benefit of having a pro account versus having a standard account? Okay, cool. Let me just take the chart off here quickly so I can look you in the eye while answering these questions. Okay, Israel, let's start with your first question, which is the question around leverage. Okay. Ooh. Let me clarify something very quickly first about leverage. Regardless of the fact of what leverage you have, so whether you have 1 is to 500 or 1 is to 100, you are not going to make more money. Okay. Let me just clarify that, and I'm going to clarify that statement too. Because leverage doesn't determine the amount of money that you will make on a specific trade. Your lot size does. Leverage, however, assists you in opening a larger lot size. So, in a little bit of a backwards way, it can help you make more money, but it's not going to directly make more money in that way. So, what I can say in that, so let me use a different example. So, let's for instance say I'm trading with 1 is to 500 leverage and Israel is trading with 1 is to 100 leverage. But we both enter a trade with a zero point 0.1 lot size. And we both have the same stop loss, same take profit, same everything. We will make or lose the exact same amount of money. The biggest difference is the amount of money required to open that position. Okay. So my margin requirement. Now, you will all have seen on your trading terminal, there's a margin requirement for entering a specific trade. Now, if you're trading Forex, it's super simple. Every Forex contract is worth $100,000. So if you have 1 is to 100 leverage, you'll take $100,000 divided by 100, which gives you $1,000. So that means for if I wanted to open a full lot, so a one lot trade, I would require $1,000 worth of margin. Now, if you have a 1 is to 500 leverage account, you would require $200 worth of margin. Now, what benefit does that give you? Okay. That basically means, let's for instance say you have a $2,000 account. If I had a 1 is to 100 leverage, out of my $2,000, the moment I open the trade, $1,000 will be moved as my margin requirement. My free margin would remain the $1,000, which would mean I would reach stop out around a $980, $970 drawdown. That's when you will reach stop out. If you had a 1 is to 500 leverage account, you would be able to go to about a $1,750 drawdown before reaching stop out. Okay. So what I'm trying to say here, answering your question specifically regarding the larger drawdown, is yes, you'll be able to manage a larger drawdown. Okay. But you'll be able to lose more money because leverage allows you to open larger positions with a smaller trading account. Normally, as your trading account grows, and my recommendation normally on this is if you are having a small account, and in my viewpoint, a small account is almost anything under $2,500, to $5,000. You can basically have as large leverage as you want. So anything between 1 is to 100 to 1 is to 500. As your account grows, start lowering your leverage so it forces you to manage risk better. To give you an example, I trade with 1 is to 30 leverage. Just because of the fact that where my account has gotten to, there's no use in me trading with 1 is to 100 or 1 is to 500 leverage anymore. So I'm trading with a lot less leverage. I'm trading with 1 is to 30. Um, and it basically forces me, based on my margin requirement, to manage risk on my account better because my primary objective as a trader is to protect my capital, not make money. Making money is always secondary to me protecting my capital, and hence that explanation. Israel, either I did one or two things. Either I just confused you so much that you don't know what's going on, or I answered your question. So please let me know which one it was, okay? And for the rest of you, if you want to weigh in on that as well, I would gladly hear from you as well. So please let me know as well. Then, difference between a pro account and a standard account is your spreads, okay? Pro accounts have tighter spreads, but normally require more deposit, so a larger deposit to be able to get the account. Um, so that's about the biggest difference between a pro account and a standard account. It's just leverage. Now, not leverage, spread. It's just spread that differs. Now, depending on the type of trader you are, spread either matters a lot to you or not, doesn't matter at all. Okay. For instance, if you are a swing trader, spread should in essence matter absolutely nothing to you because you are looking at such large movements that, you know, zero point 0.1 pip doesn't really make a difference in your life. If you're like me and you're a scalp trader or intraday trader, spread makes a difference in my life. Okay, my movements are small, so every pip counts for me. Okay, every pip for me counts because I'm a lower time frame trader. I thrive in that 5 minute area, so that's where I do my best trading. So for me, spread makes a difference. Again, um, but yeah, that's very simple. The difference between the two accounts. Pro account, if you want tighter spreads, fantastic. If that is required by your trading strategy. And if you're like, for instance, a swing trader and you don't really care, then standard account, it's going to do the exact same thing. When we look at things like execution speed, etc., it's all the same. Okay. So I hope that helps. Robert says, agreed with Francois and understood by me. Yes, thank you. And Israel said, well answered. Thank you. Sir, you are most welcome. Thank you so much. If there's anything else, please feel free to ask. If not, here's what you should watch going into the latter part of the session today and tomorrow. First things first, keep an eye on the dollar. Does the dollar stay steady as markets digest weak factory data and dovish Fed signals? Very important question. Second, does USD JPY stay contained inside that channel that we looked at? Or do intervention fears and Bank of Japan hike expectations start pulling harder? Number three, does Bitcoin hold above the 90,000 breakout zone while ETF inflows and sentiment stay supportive? Or do we see some corrections? And then lastly, can the Dow keep its energy driven momentum going as we all position ourselves ahead of Friday's NFP report? Well, and the reason for asking these questions is because markets at this point in stage, as we looked at them right now, may look relatively calm, but this week is building towards a moment where data forces the market to stop vibing and start deciding. So, and markets don't always decide politely. They normally just like sprint in a direction. That being said, thank you so much for everyone who joined me here today. That wraps up our daily market brief for today. Brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to atfx.com if you are not trading with ATFX as yet, and we'll go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.